Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 5th, 2024, and we're diving into the third quarter earnings report of Restaurant Brands International, the parent company of iconic brands like Tim Hortons, Burger King, Popeyes, and Firehouse Subs. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss RBI's latest financial performance and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Restaurant Brands International reported total revenues of $2.291 billion for the third quarter of 2024. John, how does this compare to last year, and what are the key drivers?
RBI's total revenues increased significantly from $1.837 billion in the same quarter last year, driven by the inclusion of the Restaurant Holdings segment and organic growth in their International and Tim Hortons segments. Adjusted operating income also saw a healthy increase to $652 million, reflecting a 6.1% organic growth, which is quite impressive given the competitive landscape.
And what about profitability?
Adjusted diluted EPS rose to 93, a 4.6% increase organically. This improvement is largely due to operational efficiencies and strategic acquisitions, despite some headwinds from foreign exchange impacts.
Segment performance and strategic initiatives. John, let's break down the performance by segment. How did Tim Hortons and Burger King fare this quarter?
Tim Hortons showed resilience with a 2.3% increase in comparable sales, particularly strong in Canada. However, Burger King faced challenges with a 1.5% decline in system-wide sales, primarily due to a decrease in U.S. comparable sales and net restaurant growth.
What about Popeyes and Firehouse Subs?
Popeyes continued its expansion with a 4.1% net restaurant growth, although it experienced a decline in comparable sales. Firehouse Subs, on the other hand, managed to increase its adjusted operating income to $12 million, thanks to effective cost management and a slight increase in net restaurant growth.
Operational efficiencies and future outlook. RBI has been focusing on operational efficiencies. How is this reflected in their financials, and what does the future hold?
RBI's net debt stands at $12.95 billion, but they have managed to generate a robust free cash flow of $898 million. This financial strength allows them to declare a dividend of 58 per share. Looking ahead, RBI is optimistic about achieving over 8% system-wide sales growth annually through 2028, driven by strategic investments and brand enhancements.
That's quite an ambitious target. What are the key initiatives supporting this outlook?
Key initiatives include the Reclaim the Flame plan for Burger King, which involves significant investments in advertising and restaurant remodels. Additionally, RBI is focusing on expanding its international footprint and enhancing digital capabilities across all brands.
CEO and leadership insights. John, what insights did we get from the leadership team, particularly from CEO Josh Kobza?
CEO Josh Kobza emphasized the resilience of RBI's business model and the dedication of their teams and franchisees. He highlighted their focus on improving franchisee profitability and investing in long-term brand growth. Kobza expressed confidence in achieving their target of 8+% adjusted operating income growth for 2024 and beyond, which is a strong statement of their strategic direction.
It seems like a positive outlook from the leadership. How does this align with their current performance?
The leadership's confidence is well-founded, given the solid financial results and strategic initiatives in place. Their focus on operational efficiencies and brand investments is expected to drive sustainable growth and profitability.
Key takeaways. As we wrap up, let's summarize RBI's performance and investment prospects. John, what are the key takeaways?
RBI has demonstrated strong revenue growth of 24.7% year over year, with adjusted EBITDA reaching $748 million. The declared dividend of 58 per share reflects their solid cash flow position. With a long-term growth target of over 8% in system-wide sales, RBI is well-positioned for future success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Restaurant Brands International's performance in the comments below.